do this. Yes! 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 No! 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 Fuck!
To be quite honest, that was my initial reaction when I saw T would be cutting their dividend. I was happy at first, and then I was sad. For those of you who have been living under a rock in the past month, AT&T basically spun off its Warner Media assets in a $43 billion deal to merge with Discovery to form a new company. If you haven't already, make sure to watch the portfolio overview video, which was the first video on my channel. As if you guys did watch it already, you would know that AT&T is the top position in my portfolio, or at least was at one time. In today's video, we will be recapping the deal, we'll be going over my thoughts on the deal, will I be holding, why are people mad, and we'll even be looking at some of the CEO's thoughts on the deal. The reason I waited a month to make this video is I didn't want to make my initial video pure raw emotion. I wanted this to sink into my gut and really make my decision off of that. Also, if you're new here and you enjoy the video, make sure to smash the like button and subscribe. Turn on post notifications. It would really mean a lot to me. I'm going to be starting posting every Friday for the next 3 or 4 months since, I passed school. So make sure to do that. Also, join my Dividend Discord server. The link is in the description. There's no, course or anything, so make sure to join that. So what was the deal? AT&T spun off their Warner Media assets in a $43 billion transaction that was done via reverse Morris trust, making the transaction tax-free. This new company, AT&T shareholders will get 71% of, and Discovery shareholders will get 29% of. This deal is set to close in mid-22, so we have plenty of time to discuss and analyze this deal, and learn more details as time comes by. With this, the AT&T dividend will be reduced due to the Warner Media segment leaving. Will the new company pay a dividend? Probably not, since it's just an IPO, but maybe in the long term they will. AT&T also announced they'd be cutting their dividend payout ratio to 40 to 43%. As I said earlier, this change won't occur till 2022, so we still got about a year worth of those meaty dividends from AT&T. When investors heard this news, they were really angry, especially the retirees who honestly depended on that AT&T dividend income. This resulted in people selling out of their shares of AT&T, thinking the company would go to hell. And honestly, I don't blame you if you sold out. The company's management really mistreated some of its shareholders in promising that they had a safe dividend, and I'd even argue they did have a safe dividend, resulting in it being one of my top 5 positions in market value in my portfolio. Here's what AT&T CEO John Stinky had to say regarding the dividend cut or reduction, if that's what they want to say.
There's this morning who are looking at this and looking at what looks like a cut to the dividend. What do you say to them?
I would tell you, look, when you do something like what we've done here, which is we're moving out a substantial portion of the cash flows with the media company, and in return giving the shareholder an equity interest in that. We recently sold off part of the DirecTV company, which also had cash flows associated with it. It would be only normal for a company to come in and relook the dividend, given that the asset base has kind of been resized a bit. And as we've guided and shared with the market, we're going to be in about a 40 to 43% payout rate when we set that. And that's still going to have the AT&T dividend for those shareholders that stay behind at the top 95% of yield for dividend-paying stocks. It's still going to be a very attractive dividend. And some of that money that we're not paying out in dividends now, we're putting back into the business to reinvest in higher growth, higher return opportunities in broadband and wireless. And every shareholder should want us to do that. because it's better, rather than to pay a 5% dividend, to go out and put it into something that can return 18, 19% and generate the value and growth associated with that.
Jim Cramer was against AT&T for years, and he recently started recommending the stock. Here's what he had to say on the recent move.
Craved. He knew they craved it. People who own AT&T aren't chasing growth. They're widows, orphans, and grannies who need income. They're the least short-term, most long-term, and most trusting investors you could ask for, blindly trusting. But apparently AT&T needed to spend more money to stay competitive with T-Mobile and Verizon. So what does Stanky do? He sells Time Warner for $43 billion and a stake in a new company that will merge with Discovery, another network. Remember, his predecessor paid $85 billion 3 years ago for this thing. At the same time, Stanky, who'd recently been encouraging people not to worry about the dividend, told you it was fine, goes ahead and slashes the dividend almost in half. He didn't say it point blank, but the release talked about how the payout would be pegged to cash flow. And when you do the math, that results in a dramatic slash of what most of the shareholders counted on. Of course, they wouldn't even call it a slash or a cut. They called it a resizing, as if it were some sort of suit. Listen, I'm trying to present this story as dispassionately as possible. And you know that. You know I'm not making incendiary charges here, because we've got something bigger than insults for these guys. Yep, tonight we're dusting off something I've rarely used in 16 years of Mad Money, and it's called the Wall of Shame. Honestly, I should put AT&T's entire board of directors on the wall, but they still have the chance to claw back some of Stevenson's compensation. So let's see what they do. Still, I've heard some of these guys talk about how the criticism comes from short-termists, people on trading desks who don't understand. What a joke. Nobody's less short-term than these poor, suffering, dividend-seeking investors. Randall Stevenson and John Stanky.
So with this new company, I will be getting around $200 in shares, somewhere around that ballpark, assuming there's a $10 IPO. With that cash, I plan on selling 75 to 80% of my shares and using those to just buy good quality companies or just hold the cash. The reason I'm selling a majority stake of my shares is basically because I have a lot of money tied into Disney and the entertainment business as a whole. I don't like putting too much money into Disney's competition as well, since I'm really long in it, and it's one of my top positions. With that said, this new company will have a pretty good economic moat, and that's something I love to have in a company. So that's why I want to have a small portion of my portfolio in it. So with that said, I don't plan on selling any of my AT&T shares. With the money that they're going to save with that dividend cut, they'll be putting that right back into their core business in the 5G fiber business. And people are still forgetting AT&T is still going to have a pretty nice dividend yield of 3 to 4%. If anything, the dividend's going to become safer with this for the long term. Another big reason I'm not selling is because of my situation. Look, I'm not reliant on this income like many shareholders were. I'm willing to go through a little dip in the dividend history for riches in the dividend history in the long term. They also have less business segments to worry about, which actually could be a good thing, which they could focus more money and more attention to their 5G business so they can compete with Verizon and all the other telecommunication services. Personally, I won't be buying any more shares, and I'll just let my drip do the work for me. If the stock dips another 10 to 15%, I will definitely be looking into it, but it doesn't look like it will at the moment. In my opinion, the pros of this deal are AT&T has a lot less debt, and they're a more focused company. There's going to be a top 10 position in my portfolio for sure.